Is the Federal Reserve about to bring back QE, quantitative easing, QE4 or QE to infinity? Since 2014, the Fed has officially not done any QE. Now, they have reinvested some of the interest payments on their balance sheet, on the bonds they own, the treasuries, the different parts of the yield curve that they own. However, they have not officially done any QE since 2014. That does not mean that the rest of the world hasn't done QE. In fact, there's been an explosion in central bank balance sheets during that span as the other major central banks, the People's Bank of China, PBOC, the European Central Bank, ECB, the Bank of Japan, BOJ, and even the Bank of England all did QE. So it was either simultaneous or coordinated. The Fed has taken a break, but recently it has come out, and Reuters is now reporting this. This was a February 8th, 2019 article from Reuters, and it says Fed debating if balance sheet should be regular tool. So I'll just read part of the article. U.S. central bankers are currently debating whether it should confine its controversial tool of bond buying to purely emergency situations or if it should turn to that tool more regularly, San Francisco Federal Reserve Bank President Mary Daly said on Friday. Quote, in the financial crisis, in the aftermath of that, when we were trying to help the economy, we engaged in these quantitative easing policies, and an important question is, should those always be in the toolkit? Should you always have those at your ready, or should you think about those are only tools you use when you really hit the zero lower bound and you have no other things you can do? What other policy tools does the Fed have? I mean, Congress is broken, right? Congress is not doing anything meaningful these days. Daly told reporters after talk at the Bay Area Council Economic Institute. One more quote from her. Quote, you could imagine executing policy with your interest rate as your primary tool and the balance sheet as a secondary tool, but one that you would use more readily, end quote, she added. She continues on the quote, that's not decided yet, but it's part of what we are discussing now, end quote. So Zero Hedge also covers this, and there's a cool, interesting tweet in there from Hipster Trader. The year is 2021. The Fed institutes QE every time the S&P 500 drops 50 basis points. But I would add that one of the reasons maybe why the Fed is even considering doing more QE is this news that also came out the same day on Friday, February 8th, that primary dealer treasury holdings hit all-time high as foreign buyers balk. So the largest holder of U.S. treasuries right now is the Federal Reserve, because foreign buyers, so Russia, China, etc., have dumped so much U.S. treasuries. Now, this hasn't destroyed the yield on the treasury market yet. The 10-year yield is at, let me just pull it up really quick for you guys. The 10-year yield, I'm on Yahoo Finance in a second, I'm getting it. Okay, 2.66. So, and the VIX is down to below 16 at 15.97. The dollar index has rallied to 97.06. The dollar index actually has had a record rally. It's the longest streak of daily gains in 2 years for the dollar index. It bottomed, it looks like, on January 30th or January 31st, and it's been pretty much going up every day since. And that's probably, in my opinion, mostly due to weakness in Europe, problems in Europe. The riots in France are still ongoing. But let's go back to the treasury market. So the treasury market yields have not spiked. However, I think what the data is showing us, and I'll attach a link to the article about the primary dealer treasury holdings, and also people have been talking about how the Fed is now the largest holder of treasuries. But I think Victor Sperandio is really, really onto something, because I think the data with the primary dealer treasury holdings, it is adding to the theory that Victor Sperandio has about the hold to maturity treasury account. So these large U.S. banks, they can buy the treasuries as primary dealers, and then they can stuff them and not take losses and use them as collateral still, hold to maturity, and not have to mark down the losses in their hold to maturity accounts. So this was anticipated, maybe to delay the next QE program. So the Fed, wouldn't it be interesting, guys, if the Fed started to do QE and the dollar index didn't collapse? Wouldn't that be interesting? But it seems that the Fed is now very, very hesitant to raise interest rates too much more, because they're worried about the credit markets cracking, other things cracking, the global economy, the U.S. economy, the corporate bond market. I could go on and on. The shale boom the shale boom, which could bust in the near future. Everything is so leveraged that if interest rates are intentionally hiked, it could crack things. So interest rates are not normalized. They have been raised, but only quarter points, like 6 or 7 times approximately. But a ton more debt has been taken on since the 2008 financial crisis. So even though interest rates have been somewhat hiked by the Fed recently, mostly because Trump won the election, I don't think if a Democrat would have won, I'm not sure if the Fed would have even raised rates. But the total amount of debt globally has just increased massively. So when the total amount of debt globally has increased this much, it doesn't take a massive spike in interest rates to blow everything up. So I think comment in the comment section or in the live chat what you think about maybe why the Fed is considering doing more QE, because it could also be because the dollar, they're worried that the dollar is strengthening too much again. Because yes, the dollar has been range bound, but if the dollar index continues to move to, 98, 99 above those overhead resistance levels and breaks 100 or 101 or 102, it could really take off, and that would potentially collapse a lot of different things throughout the global economy, including like emerging market debt, emerging market banks, emerging market corporations, European banks. The European banks are already in trouble, but it would accelerate and exacerbate the problems. So I don't know if anyone really wants a super strong dollar. There's a really good discussion about this between Brent Johnson and Luke Roman on Real Vision TV. Speaking of and they just released another discussion between those two today about the gold market. But speaking of Real Vision TV, there was another thing I wanted to bring up really quick. So there was a really good discussion, I think it was either end of December or early January, between Grant Williams and Raoul Pal, who are the two co-founders of Real Vision TV, and they were just talking about markets. And so they were talking about the treasury market, and Raoul Pal thinks that the pension funds in the U.S. are very, what's the right words here? They don't have enough treasuries. They're underfunded in treasuries, or they could accumulate a lot more U.S. treasuries. So he thinks that pension funds could be some of those buyers that come and buy up the treasuries, or either voluntarily or they're forced to. I don't think he talked about being forced to, but they were also discussing currency swaps, the central bank currency swaps, and they talked about how the Fed and maybe the People's Bank of China would start to increase the currency swaps. But the truth is that, in my opinion, you guys know I broke the story 2014, and we know from the Ron Paul one-time partial audit that, and added this to the source that I got with the information, that the currency swaps really never stopped after the 2008 financial crisis. The European Union, the European Central Bank, the European banks, the European government bond market was so bad that the currency swaps between the 2008 financial crisis, and 2014, that was the last time I got information from my source, and I'm sure we've seen the news stories come out about all the problems with the European banks. I'm sure things have not improved. So the currency swaps, maybe they were reduced between the Federal Reserve and the European Central Bank at some point between maybe 2008 and present. Maybe they were somewhat reduced, but I don't think they ever stopped. Okay? So interesting that Grant Williams and Raoul Pal are talking about how, what the last resort for the central banks is if the dollar gets too strong, if things are about to collapse, for rather than enormous amounts of more, overt QE, publicly announcing QE. Because let's face it, a lot of people know what QE is now. They know it's bad. They know it means banker bailouts and government bailouts and stuff like that. So to do it more covertly with fancier program names or things like currency swaps, the central banks do not have to, because there are no real independent audits. Ron Paul got a one-time partial audit at the Federal Reserve. The Federal Reserve lawyers fought it tooth and nail. They said, we never want to do another one. National security is a risk. The normal government bullshit. And so I unfortunately, we are just not in a world where there's transparency, and it's getting worse. And if they resort to more currency swaps and it goes to I think it's already at an astronomical number. I think, I would not be shocked if the total amount of liquidity that's been put into the system by all the different governments to put out fires in the over-the-counter derivatives markets and elsewhere since 2008 is over $65 trillion. I would not be shocked. Okay, let me just put it that way. There's a bunch of different. There's the $21 trillion missing from the Pentagon. There's the currency swaps with the Federal Reserve and the People's Bank of China that they've given out. And, you could just go, there's the Eurodollar market, which Jeffrey Snyder of Alhambra Capital talks about in Eurodollar University. You can go listen to seasons 1 and 2 for free over on the Macro Voices podcast. And these things are all pieces to the puzzle. And the currency swaps are really the thing that can be the emergency liquidity injections that can be increased the fastest. So basically within a month or so, there was tens of trillions of dollars in extra currency swaps added. Okay? That's what we know from the one-time partial audit of the Federal Reserve. Australia, we have some Australian listeners on the live stream. Cheers, mates. I saw this great, I'm shocked at this, guys. You can comment about this. I'm shocked 60 Minutes Australia is actually doing some halfway decent journalism there about your housing bubble. Now, they're still mocking some of the housing experts, the real estate experts in Australia that were predicting the collapse in the real estate prices and saying that the real estate market in Australia is going to crash more. But at least they're showing some of the stuff, right? I mean, that's an improvement for the mainstream media. I was shocked that the new 60 Minutes Australia, I watched that a couple days ago, 14-minute video on YouTube, and one of I think the most brand new ultra luxury condo building in downtown Sydney, they're worried it's going to collapse. So these $800,000 plus luxury condos, like 1 bedroom or studios, some people put their whole life savings into they're worth nothing right now. It's really sad. And they were interviewing the Australian real estate expert, and he was saying basically that an enormous amount of construction corners were cut, and that people may die from, these faulty buildings. It sounds almost like China. That's kind of weird, hearing that corner. Australia is known for having pretty high integrity in a lot of things and heavy rules and regulations. I'm surprised that so many corners with construction and stuff would be cut in Australia. Maybe they hired Chinese construction companies, right? There's tons, and the reason I bring that up, there's tons of videos out there of buildings falling apart or decrepit or made with really crappy material in China. Either they were not completed, or as soon as they were completed, they started to fall apart because corners were cut, the materials that were used were so improper and so poor to save money, to cut costs, to make extra profits, that the buildings are unsafe. And if you tried to do something like that in the U.S., you not only would be sued to death, you would be risking going to prison for a very, very long time because all the rules and regulations, and there's tons of them here in the U.S. for buildings codes. Although if you're a contractor in California, I think there's so many criminals there. My dad was dealing with home building, and there's a To Catch a Contractor show, or at least there used to be, because Adam Carolla had a really good show about that. Okay, well, I think I covered almost everything I wanted to cover. What do you think about the dollar rally? Gold is actually holding up pretty good in this dollar rally. So gold is at $1307.90, and silver is holding up okay at $15.68. Not bad. So despite the dollar rally, gold is holding up pretty strong. Supposedly, Hedgeye, Keith McCullough interviewed Raoul Pal over at Hedgeye. It's the in-depth interview is free if you give them your email. They'll probably spam you, but it might be worth it if you unsubscribe. Some of you guys have enough money to afford Hedgeye, but I think Hedgeye's $1,000 a year for a subscription. It's mostly meant for institutional investors, for an information product, and hedge funds. But supposedly Hedgeye at this point is only long. They're not long a lot of stuff. They're only long treasuries, gold, and real estate investment trusts. I'm not a huge fan of REITs. There's a lot of problems in some of them, especially the mall REITs and some of the other ones. Those things are in some trouble. But the mainstream financial media, I was at the gym a week ago because it was last Monday night, and I had Bloomberg Radio on for 20 minutes maybe, and in the 20 minutes, every single current event story they read, whether it was the scathing report from the Australian government about the corruption from Australian banks and Australian mortgage lenders and all the crimes being committed, everything, even bad earnings announcements, missing on revenues, only beating earnings by a penny, shaky guidance, margins falling, that type of stuff. Every single piece of information that they were reading, they would read some of the stuff that was negative, but they would always try to find a way to spin it positively. So if Google or one of the other companies had a bad earnings announcement, I think one of them was maybe Google, and they tried, or Alphabet, their parent company, and they're trying to figure out that, I guess they have like a couple maybe low paid guys try to say like, okay, we have to come up with a way to spin this information so it's positive, so we can sell people that this stock market falling was only say it was only a correction, not a crash, that we're not in a bear market, that the higher stock prices will resume shortly. And that seems to be the message, whether it's CNBC or Bloomberg. And, that's despite a really large amount of very poor reports from company earnings, from revenues, earnings, and lower guidance. Now, there are a few Hail Marys that some of these companies are trying to report. They're trying to say, and this is always a big red flag to me, they're trying to say that they think things will pick up in the second half of 2019. That's normally BS. And when the CEO or CFO or one of the executives say this on a conference call and it turns out to be wrong, you will not hear anybody on the conference call willing to call them out on their incorrect prediction or bullshit. In a lot of cases, it's bullshit. They know that it's not true. Dr. 8, I see Alexander Ovechkin in there. I am a Caps fan as well. Regulations are good. Heaven forbid we blame the regulations. Well, regulations aren't always enforced. They aren't always enforced properly. So that's a problem. You can have regulations, but if you have regulators and bureaucrats who are taking bribes or don't care about their job and only want to collect a paycheck and don't care about doing the work right, then what do rules matter? If you're a white-collar criminal and you have enough money to, bribe people with lobbyists, or you have bureaucrats, you bribe them or stuff like that, or you have expensive defense attorneys, you're probably not going to go to prison. You'll pay a fine. That's the business model for the banks. The banks do cost-benefit analysis for manipulating markets. They pay not even a 10% fine on all their profits in a lot of cases. Unfortunately, Dr. 8, if we had more of a free market and we don't, if we had more competition and we don't, what would happen then is if someone cheated someone else, their reputation would be destroyed and they would be ruined. But that doesn't really happen anymore. That's what should happen, but it doesn't. You have situations now where if someone has enough money, a money manager has enough money that they can pay to have their all their bad Yelp reviews, dozens and dozens and dozens of them, scrubbed from the internet. And there's tons of other examples I can give. Well, society needs some type of rules. There needs to be some type of rules. Unfortunately, I don't think the bureaucrats and regulators are good at enforcing them. Although the U.S. isn't quite China yet in terms of the corruption with the bureaucrats and stuff yet. Well, in certain instances they are. Because you have the Israeli government, the Saudi government, and the Chinese government. They bought and paid for a bunch of congressmen. Oops, I probably shouldn't have said that out loud. But Congress is broken. I think Congress enjoys being broken. It's profitable for them to be broken, for the Speaker of the House and the whips and the majority leaders and all these scumbags to do very little and block legislation. There's too much money for lobbying and special interests, and afterwards, after their political career is over, they can make 7 figures a year lobbying, or they can be on board of directors of a military defense company or a bank. It's just too profitable. The corruption is too profitable at this point. So it looks like we could have QE in the near future. The rate hikes are definitely slowing down, and we may get 1 or 2 more, but that'll probably be it over the next 12 to 18 months. They're definitely going to slow. The plan initially was, I think, 3 for this year. I don't think we're going to get 3. We may get 1, but I think that's even probably pushing it. The Fed seems pretty panicked if they're floating the trial balloon for even QE out in public. They're probably polling. It's probably a trial balloon, and they're probably polling people to see what the reactions would be. And in general, the reactions for bailouts, most of the people on Main Street, whether you're Republican, Democrat, Democratic Socialist, Libertarian, you're anti-bailout. A lot of people. There's always the people, though, that say, like, the one-off, like, the Fed stepped in 2008 and did the one-time, bailout with TARP and that stuff, and that was the right thing to do. I hear that a lot. But then you hear the people say, but there should be no more bailouts. And then I'm thinking to myself, until the next major crisis that the banks and the corporations have overborrowed and push us into, and the government borrowing on the overborrowing and the government debt. You have a situation, I think, in Italy with the Italian government where they supposedly elected like conservative people, right? And they still are spending like crazy. Welcome to dystopia. Well, I am working on the video about Eat the Rich and the tax plans, and talking about some of the books that predicted all this stuff coming to fruition in the United States. I have a pretty large slide deck. Rather than a bunch of written slides, I went with some visuals for you guys. So I think it's almost 30 slides. I'm going to try to keep it around like 30, 35 minutes. I think some of you guys are going to really appreciate that. Some of you. But basically, there's been an attempt for a very, very long time to turn the U.S. into a fully socialist country, to destroy the U.S. And I will show this in the slide, give you guys examples. Okay, so let me take a look at listener questions and comments. I covered all the stuff I wanted to cover. I did it in about 21 minutes, so not bad. STCE Golf probably started talking after it kicked him off. He'll realize it soon enough. Who kicked who off? I'm not sure who you're talking about. Jason, greetings from sunny and very hot Sydney, Australia. I would like to visit one day. I did date an Australian exchange student in college, and she got pissed at me. She got pissed at me because I didn't go visit her in Australia, but I was a broke college student after college, and I didn't want to pay like a couple $1,000s for a round-trip plane ticket. She used to send me AOL Instant Messengers. They canceled that, it kind of dating myself, but she used to send me like drunk AIMs like at 5 a.m., 4 a.m., 5 a.m. She blocked me on Facebook, though, because I didn't go visit, but that was a long time ago. I think I dodged a bullet there. That's all I'm going to say. Okay, more comments on Australia. Peter says, Australia is only at 1.5% interest rates, and we are talking dropping interest rates again at the end of the year. Housing here is falling sharply now, and gold has shot higher. It's at $1,850 in Australian dollars. Everyone maxed out. Yep, it looks like you guys are going to have your first official recession in a very, very long time. And, if we had more of a free market and the markets were acting, I would say, more rationally, the Australian dollar would be in big, big trouble. Would be in big, big trouble. But who knows? With the interventions we have, the Australian Central Bank could call up the Federal Reserve or could call up other people. In the system we have now, Peter, we do not know. And because there is not transparency, there is not independent audits, we do not know if the Federal Reserve is already giving the Australian Central Bank currency swaps. They could already be doing it. The swap lines could already be open to Australia. We do not know. They could already be happening. And the only two central banks that are issuing the swap lines right now, that as far as I know, and I've studied this a lot, and I've spoken to a lot of different sources, read a lot of different material, are the Federal Reserve and the People's Bank of China. And the People's Bank of China is mostly doing it on a much smaller scale as debt traps to emerging market countries for billions or tens of billions of dollars, not in the trillions like the Federal Reserve is doing. And China is doing it strategically, like with Venezuela, in exchange for like oil, like guaranteed oil supply, and into Africa and into Southeast Asian countries. So China is using it on a much smaller scale, the People's Bank of China is, than the Federal Reserve is, and it's being done for a different strategic purpose than the Federal Reserve is. Hey, Chris, yes, it's Opal Tower. That is the name of it. I saw it in the 60 Minutes Australia video. It had a beautiful view. In theory, it should have been a great building. It's a disaster. I hope it doesn't collapse, but it's looking pretty bad. Matthew Werner says they did hire Chinese construction teams. Same as New Zealand. Oh boy. Hello, Alex. Well, if your currency falls and people don't think of things this way, if your currency devalues, the stock market should price that in. So most people don't, a lot of financial professionals and hedge fund managers don't even understand this, the difference between real terms and nominal terms with the inflation rate. So if the currency devalues and the stock market goes up, do you really have any gains? So did you hedge the currency risk? So a lot of people think that they're rich because the stock market went up, but if the currency is devalued a lot and the stock market prices that in, you don't really have a lot of real gains. So some of the highest performing stock markets on a percentage basis in history have been like Weimar Republic, Germany, hyperinflation. The stock market on a percentage basis went insane, but the currency was destroyed. In Venezuela, the stock market went up a lot. Their currency has been destroyed. Same thing for Zimbabwe. Their stock market went up a lot. Currency is destroyed. Fitness and finance is correct. Dow pricing gold hasn't recovered since 2000. And the Dow to gold ratio really is only to tell if the stock market is a good value or if gold is undervalued. Kirsten, who is Dr. Duke that blasted Trump? He's Republican. Do you mean David Duke, the Nazi guy? He's been endorsing Tulsi Gabbard and Ilhan Omar. That's the radical Democrat from Minnesota because she just made some anti-Israel, anti-Jew comments. I don't know if you're talking about David Duke. Fitness and finance. Does anyone think that the Fed will ever hike rates ever again? They could do maybe one more. They could maybe do one more if the stock market rallies enough. The problem, fitness and finance, is the dollar is already rallying. So the Fed is really, I think the Fed is really worried that the dollar is starting to get too strong. I am sure, because I've heard this from my sources, from a number of different sources, that there are foreign governments, foreign central banks, there are foreign corporations even that are reaching out to the Fed, telling them not to raise rates more, to slow down the rate hikes. Peter says interest rate hikes, you forgot to put hikes, are done. It's over. QE4 is coming. Yeah, it's a question of when and not if. The problem is public backlash. So how many people are going to get angry enough for pitchforks? Because remember, in 2008, banker bailouts, real estate crashing, stock market crashing, you had an enormous explosion in angry people from the Tea Party and libertarians on one side, and then Occupy Wall Street on the other. And Occupy has turned into basically like Antifa and a lot of democratic socialists now. The Occupy movement has morphed into, I would say, initially it was mostly, there wasn't a whole bunch of violence in the Occupy Wall Street. There was like protests, but now it's turned into a lot more violent stuff lately. More like Europe, although I don't think the U.S. in terms of violence is anywhere near what's happening in France. Not yet, anyway. Fitness and finance. Spread democracy, quote, spread democracy, quote, while allied with the monarchist Saudis who stone gays and women for showing skin. Yeah, man, I mean, it was like a deal with the devil because the Saudis had the oil. So, now the U.S. doesn't really need the Saudis as much for the oil, and that's why the Saudis are doing deals with the Chinese and elsewhere. But the Saudi money helped in the 2008 financial crisis. There's tens of billions of dollars of Saudi money in Silicon Valley now. Most people are not aware of that. that a lot of Silicon Valley social media companies and startups took billions of dollars from the Saudis. Most people are not aware of that. Fitness and finance. If socialists take over, Atlas will shrug. Well, there are a lot of Americans trying to figure out ways out of the country, but you have to have a certain amount of money to do that because most people earn their income around where they live. Most people do not have the ability to move, have not saved up enough money to retire and be diversified. So it's a difficult situation. I mean, ideally, if you have enough money, you should have diversified assets all over the globe. Rental properties, some gold and silver. This is not financial advice, obviously, just my opinion. And, maybe a couple passports, and you can travel if you have to, and you have enough diversification with your investments to where you have some money coming in and you have investments in different countries and jurisdictions. But most people don't have that type of savings. Most Americans, unfortunately, don't even have $500 for an emergency, like a health emergency or to fix a transmission in their car. Meanwhile, you have President Trump saying how great the economic recovery is. Well, if the economic recovery is so great, why is the Fed talking about QE4? Why can't interest rates, even though we've had hikes, why can't they get to somewhat normalized levels? So, I mean, there's always spin. Hello, Kirsten. I've said this for years now that there's an argument to be made that a lot of the monetary inflation went into asset prices and that the valuations on a lot of asset prices have already hyperinflated. In the real economy, though, in most major economies, Kirsten, even in emerging markets, but also in developed countries, case study Japan. So Japan says there's no inflation, but if you talk to podcast listeners who send me tweets with pictures of their food packages and portions being shrunk, Japan has shrinkflation and stagflation, and Japan has really bad stagflation for years now in like rent, food, those types of things. So I think in the real economy, I think a lot of the economic and political elites are pretty happy with kind of keeping things in somewhat of a manageable stagflation. And as long as they can direct most of the monetary inflation and the credit into asset prices, that they figure that will keep like the baby boomers happy. But the younger generations, like my generation, which is like Generation X and Millennials, or Generation Z, the younger generation, there's not going to be necessarily cheap assets for us to buy unless for a short amount of time, maybe 6 to 12 months, they allow a crash in asset prices. But it seems that the preferred method of dealing with the crisis, whether we have like another system reset or whatever the next global financial system is, some type of reset, that the preferred method is to transition there with higher asset prices. I don't think deflation is bad. I think deflation is a good thing. We should have more deflation in the real economy. I would like to get more for less. My purchasing power increases. I would like to get higher quality food for cheaper prices, higher quality consumer items for cheaper prices, consumer staples, things like that. I would like to get higher quality assets for cheaper prices. And it seems that the people in power, because they believe in Keynesian economics, because everything has been leveraged with more and more debt since 2008, they don't believe in that. And the problem is the fiat currency itself and how, everything's leveraged with so much credit. Well, I've been saying this for years, stagflate and lie. Okay? In a perfect world for the central bankers and the politicians running most of the major economies, they want a stagflate and lie scenario where the asset prices stay high so they can collect enormous capital gains taxes on the higher asset prices, and there's stagflation in the real economy because they don't want to allow real deflation. Even though I think deflation would be a good thing. In some electronic items, so with Moore's Law, you are getting some beneficial deflation. So you're getting more computing power for less overall money. So what cost you $1,000 maybe 10 years ago, you get a lot better deal for a Pentium chip and a computer now for $1,000. But yes, there is very little real deflation, and it's intentional. It's not really allowed anymore. And that's also because a lot of these governments have allowed these corporations too, because the governments and corporations are in bed. They're in bed with the regulators too, and they've basically allowed at most like 3 to 5 companies to take over almost every single industry. And then once there's like oligopolies in almost every single industry, then the companies have basically pricing power, and then they don't have to lower their prices. You're seeing this now, unfortunately, with the cable companies here in the US. So hopefully there will be technology improvements and innovation that destroys the major cable companies like monopoly profits. So you have like basically 4 or 5 cable companies in the entire US that no matter what, the prices never go down. So the internet connection prices, the cable company prices, these prices should be falling with competition, and the exact opposite is happening. They keep jacking the prices up every year no matter what. Okay, well, I'm looking through listener questions and comments. I think that's about it. Oh, there are some more interesting things. So I think like Turkey now is starting to accumulate gold. So they reversed after selling a lot of their gold for the last couple years and having currency problems and stuff like that. The mess that is Turkey, I think they've even started to copy China and Russia, and now they're starting to accumulate gold too. Kirsten, many cable companies are private. Yeah, some of them are private, like Cox Cable. Cox Cable is private, I believe, but Verizon is public. AT&T, which bought DirecTV and also has cable packages, and I can't remember if Comcast is public or private. But there's really only a handful of large cable companies throughout most of the country, so there's not really any competition. And in order to lower prices, you need competition. Okay, I'm still looking through a couple more listener questions and comments. No Reply says, where does everyone think the next black swan event that will trigger a global recession will come out from? So I've talked about this many times in the last couple of years, and rather than giving you a guaranteed answer, I attach like probabilities to them. And the highest 3 probability, I call them economic landmines. The largest and most dangerous economic landmines, in my opinion, are European banks. You have China, you have emerging markets, and you have corporate bonds. So I think those are some of the largest. If you have the oil price go low enough, that could trigger some really big problems because the oil industry is very, very large. So we'll see if there's an oil rally in the near future. The oil market is a very, very large market. But if you listen to the conference calls the last like couple weeks from a lot of the companies, whether it's Apple or FedEx and some of the other companies, they are saying, and Caterpillar, they are saying that the main problems for their sales, where they're down a lot, is in Europe, European Union, and China. So they're saying those are the ones that have slowed down the most. Okay, well, that's my favorite economic cartoon, or one of my favorites. So I wanted to bring it back. I know Ben Bernanke's not the Fed chairman anymore, but, you know, Ben, or Buzz Ben Bernanke Lightyear, neither snow nor rain nor heat nor common sense shall stop this appointed Fed chairman from quantitative easing. I shall print dollars to infinity and beyond. Okay, well, that's it for today's live stream show. I'm going to go to the gym now, and then after I get back home, I'm going to try to work on that video I promised you guys. Hopefully get it out in the next couple days. Okay, bye.